And welcome back. Here's your latest housing market update because I have some big news because average 30-year fixed rate mortgage rates just increased to a 9-month high according to the latest news from the Mortgage News Daily as of August 14th this year. So I'm going to share that information as well as the latest housing market update from Redfin regarding home prices, housing inventory, home sales, and of course price reductions as well. So I have a lot to share in today's video. Let's go ahead and dive right in. I appreciate you guys for joining me in today's video here. So the latest news I have for you guys on the 14th of August here is that the 10-year Treasury note, the yield on that increased to 4.20%, the highest rates we've had for the 10-year going back to October last year. That actually caused average mortgage rates to increase to 7.24% for people with exceptional credit. That's pretty wild because that is not too much far off the 12-month high that was set at 7.37% in late October last year. Also, jumbo is also around 7.25%. FHA and VA is around 6.92% and 6.95%. Also, 1 year ago, average rates were at 5.33%. So therefore, rates have increased approximately 2 percentage points over the last 12 months. Also, when looking at this graphic right here, at 7.24%, this is the highest rates we've had going back to early November last year. And before that, in recent memory here, rates haven't been this high since late October last year. And before that, rates haven't been this high in about 20 years. To give you guys some context regarding this big shift in rates right now. So that's that, because the stats I'm sharing in today's video could look a little bit worse in about a month or two, given the fact we have rising rates, of course, but also due to seasonality, where a housing market tends to slow down for the rest of the year in general. So Redfin posted on the 10th of August last week that low demand is meeting lower supply, which is causing home prices to increase. I have some news to share regarding that. So the U.S. median sold price is up by 3% year over year, despite relatively slow demand. I've been talking about this on channel for quite some time, right? We've been seeing a lack of demand and also a lack of supply, but because there's a lack of supply more so than a lack of demand, this is causing home prices to increase compared to 1 year ago. And it says right here, that's due to a shortage of houses for sale, with inventory posting its biggest drop in over a year and a half. One thing I do want to add, which I mentioned last week, is that we're not only seeing an increase in prices year over year because of a shortage of houses for sale, but also at this time last year, home prices were decreasing at a much faster clip than we're seeing this year. That's why, in part, because we're seeing an increase in prices year over year. I'll share some stats regarding that here in just a little bit. So this housing market report covers the 4 weeks ended August 6th this year, according to Redfin here. So let's first talk about home prices, and then we'll talk about the metros in which home prices have increased the most, and also the areas in which home prices have decreased the most. So in the U.S., the median home sold price was $381,225, up by 3% from 12 months ago. That's the biggest year-over-year increase since November. So here is a snapshot looking at home sold prices according to Redfin's data center. If you guys want to follow along, or if you want to look at stats in a different metro, in today's video, I'm just going to touch on what we're seeing right now in the U.S. But I'm also going to share home price trends in Miami, Florida, as well as Austin, Texas as well. Some very big changes compared to those two cities here. So in the U.S., again, the median sold price is at $381,000. To start the year, we were at $349,000. This means the median sold price has increased by about 9% year to date. Also, something interesting to note here as well is that home prices were decreasing for about 3 weeks in a row there, but prices did increase by about $1,000 last week. However, we should start to see this start to decrease for the remainder of the year because of seasonality, and of course because rates are so high as well. But one thing we did not reach was last year's all-time high. The all-time record high was set in the 4 weeks ended June 19th last year at 386,000. Now it's 381,000. I mean, only $5,000 off, but I'd be shocked to see all-time record highs because we should start to see home prices continue to decrease for the remainder of the year. Also, one more thing I do want to mention, because we're seeing increases in prices from 1 year ago, that's really due to the fact that prices were falling at a much faster clip at this time last year compared to this year. All right, let's get back to the report here. It says here, home prices increased the most in Miami, Florida, up by 12.6% year over year. After that was Milwaukee, Wisconsin, up by 12.1%. That's actually the first time I've seen 2 of the 50 most populous metros up by double digits. For quite some time, we're in the single digits, and Milwaukee, Wisconsin was also the number 1 spot for quite some time. But after Miami and Milwaukee was West Palm Beach, Florida, up by 9.2%. And then we had Cincinnati, Ohio, up by 8.9%, and San Diego up by 8.6%. Here's something I've been talking about on the channel for, I don't know, about a month now, because home sold prices decreased in 12 metros compared to 1 year ago. I've been talking about this because last week, when Redfin made this report, or I should say a week and a half ago, they reported that 19 metros were down on a year-over-year basis. And what I've been telling you guys, that the number of metros that are down year-over-year is likely to decrease because home prices were decreasing at a much faster clip at this time last year. And so I would imagine, again, I'll say this again, this number right here is likely to decrease in the weeks and months ahead. So having said that, the biggest decrease was actually in Austin, Texas, yet again, a decrease of 10.6%. And then we had San Francisco down by 6.3%, and then Phoenix, a decrease of 3.6%, and then Fort Worth, Texas, and Las Vegas, Nevada. So I do want to touch on home prices in Miami versus Austin, Texas very, very quickly here, because obviously some very big changes here. Miami, Florida, the median sold price for the 4 weeks ended August 6th is at $525,000, up by 13% year over year. At this time last year, home prices were up by 13%. And then look at this, 2021, drum roll, up by 20%. So in 2 single years here, the median sold price went from $413,000 to $525,000. And that's an increase of 27% in 2 years in Miami, Florida. And prices in general have been increasing for the most part this year. In contrast, look at Austin, Texas. Austin, Texas at $467,000. That's down by 11%. Also from this time last year, the median sold price was $523,000. Also, look at this because home prices are actually below levels in 2021 as well. So how wild is that? Home prices in Austin, Texas are down compared to 1 year ago, but also lower than this time in 2021. Whereas in Miami, Florida, they saw a giant increase over the past 2 years. One of the main reasons why we're seeing a decrease of home prices in Austin, Texas compared to Miami, Florida is this right here. Active listings in Austin, Texas are only down by 2.7% from 1 year ago, but well above 2021. Compare that to Miami, Florida. Miami, Florida is actually down year to date. Right now, about 10,000 homes for sale. To start the year, there's only 12,462. Compare that to Austin, Texas. Right now, there's around 12,000 homes for sale. To start the year, there's around 10,200. Let's get back to Redfin's report here because housing affordability is very close to an all-time record low. The monthly mortgage payment on a median asking price home was $2,602 per month at a 6.9% mortgage rate. That's the average rate for the week ended August 3rd based on Freddie Mac's weekly survey. But of course, as you guys all know, the daily rate as of August 14th is at 7.24%. So if that sustains at those very high levels, we probably get back to all-time record lows for housing affordability. Also, we're only down by about $39 per month, or down by about 1% from the record high that was set 3 weeks ago regarding the average monthly housing payment. And here's a chart showing just that. Just 3 weeks ago, we had all-time record highs for the average monthly housing payment. Also, when you compare this to 2020, at this time in 2020, the average payment was actually just under $1,500 per month. Now it's $2,602, an increase of over $1,000 more per month to buy an average price home today compared to 2020. Okay, let's change gears slightly here and talk about pending home sales, a measure of contracts being signed between buyers and sellers of existing houses. Pending home sales decreased by 13.2% from 1 year ago. This marks 15 consecutive months of double-digit decreases of pending home sales, which of course implies that home buying demand is still very low. And speaking of that, pending home sales decreased on a year-over-year basis in 47 of the 50 most populous metros. The only 3 metros they analyzed in which pending home sales increased year-over-year was actually in Austin, Texas, West Palm Beach, Florida, as well as Las Vegas, Nevada. In contrast, pendings decreased the most in Providence, Rhode Island, falling by nearly 29%. And then after that was Newark, New Jersey, Boston, Seattle, and Warren, Michigan. Let's also have a look at the number of newly listed houses for sale, because that fell by 16.5% year over year. And also at the 50 most populous metros, new listings decreased compared to just 12 months ago. And they also fell the most in Las Vegas, Nevada, falling by 37.5%. After that was Phoenix, Chicago, Oakland, and New Brunswick, New Jersey. And here's a look at new listings over the past several years here. The blue line here is 2023, black is 2022, and orange is 2021. So for the 4 weeks ended August 6th this year, there's around 88,000 new listings. Compare this to the same time frame last year, there's about 105,000. Therefore, we have about 17,000 fewer new listings at this time compared to 1 year ago. Now, something that's going to be really interesting here is that what is this going to look like for the remainder of the year? We should see during a normal housing market a decrease of new listings for more or less the remainder of the year, just like we saw in 2021 as well as 2022. But in 2022, because rates more than doubled in less than 1 year, that really caused the number of new listings to fall off a cliff. Whereas this year, we're not seeing that because the gap between this year and last year is actually getting more narrow. So for example, let's just look at here. The 4 weeks ended June 11th, we're down by nearly 24%. Now we're only down by about 16.5%. More or less plateauing out over the past several months here, whereas last year this time, new listings were falling off a cliff. So what I'm really curious about is, are we going to get into a scenario here in about a month or two in which we have more new listings compared to last year? Because last year, new listings were falling off a cliff versus more or less plateauing this year. All right, let's change gears again and talk about active listings, which is the number of houses listed for sale for existing houses, I should say. So active listings are down by nearly 18% year over year, approximately 785,000 homes for sale, which is actually, of course, below last year's levels, but also below 2021 as well. At this time in 2021, there was around 874,000. Now there's only 785,000. This means, of course, we have approximately 100,000 fewer homes for sale compared to just 2 years ago. Of course, it's much worse compared to 2022, though, because at this time in 2022, there was 956,000 houses for sale. This means we have approximately 171,000 fewer homes for sale compared to last year. And that's one of the main reasons why we have home prices not decreasing at the same rate we saw last year, because inventory levels were absolutely skyrocketing last year, whereas this year we're actually down. In fact, let me just look at this real quick, because right now 785,000. To start the year, there was 805,000. So this means, of course, we have approximately 20,000 fewer homes for sale compared to the start this year. Now look at last year though, because this is drastically different though. At this time last year, 956,000. To start the year, there's only 642,000. So last year this time, inventory grew by 314,000 houses, versus this year we're down 20,000. Let's also discuss the month supply right now, because according to Redfin, the month supply is at 2.7 months, roughly on par with last year's levels as well. But one thing that is a little bit different compared to last year is that the month supply went from very, very low levels at around 1.8 months. That was set back in April and May last year, but the month supply was skyrocketing through November last year. So I'm curious what the rest of the year is going to look like regarding the month supply, because we're not seeing this surge like we saw in 2022. What else do I want to share with you guys? Let's talk about days on the market, which is right here. So days on the market, it's right here. Right now, it's taking about 28 days to sell a home. So therefore, it's taking about 4 days longer compared to 2022. At this time last year, days in the market was around 24 days. And lastly, let's have a look at the average sale price to final list price ratio. That's more or less 100%. This means on average, for the houses that sold over the previous 4 weeks, houses on average sold for the seller's final list price, roughly on par with last year's levels at around 100% as well. But this is well below the peak we saw in the spring months of 2022, when on average, houses were selling for about 2.5% over the seller's final list price. So we should expect to see is a decrease of this ratio here. And then in fact, it has been decreasing very, very slowly for the past several weeks here. But we should expect this to decrease in the weeks and months ahead. But what's your biggest takeaway from today's video? Of course, I appreciate you guys watching today's video, and also for supporting my YouTube channel. Hope you guys have an awesome day. I look forward to seeing you on the next video.